This is just a quick note from my desk before the market opens. It's going to be a hard day for investors today. That's after the Dow Jones Industrial Average dropped more than 1,000 points overnight for the second time this week. First of all, I just want to make clear what's driving this market, and that is bond yields and the bond market. This is not concern around global growth, which is very strong at the moment, but more fears that interest rates are going to rise more aggressively than expected, and in fact have been. If we have a look at what happened overnight in the US, we saw a 30-year Treasury auction, which was extremely weak, and that's hot on the heels of a 10-year Treasury auction yesterday, which was week. And to add fuel to the fire, we saw Bank of England also looking to raise rates. So it's the bond market and the spiking of the 30-year Treasury yields to a new high this particular short-term cycle, which has freaked out the equity markets. On a day like this, you will see a sell-off across the board. Every single sector will trade lower. And if you want clues on which stocks will be hit the hardest, well, you only have to look to Tuesday's session, where we saw a similar fall overnight in terms of the US. On Tuesday's session, the worst performers in the benchmark ASX 200 index were WiseTech, Lynas, Beach Petroleum and Monadelphous. All four of these stocks fell more than 7%. Only one stock in the ASX 200 managed a gain that day, and that was Regis Resources, which rose by 0.25%. So it is going to be a hard day. The benchmark ASX 200 looks like it is going to try and challenge and maybe break that 5,700 point level on the open today. There will also be opportunities out there on the market, but if you are brave enough to jump in and buy, well, I would suggest going for quality and having your shopping list ready. In fact, looking at some of the banks, we haven't seen yields like this for a while. NAB will probably trade on a dividend yield of about 7% today. And on a fully franked basis, that's a grossed up yield of 10%. And we haven't seen those type of yields for a number of years. So certainly there will be opportunities out there in the market for the brave, but brace yourself because today's going to be a tough day.